Hey guys, welcome back to Reserved Investments on YouTube. And today, welcome to part one of my 4,000 subscriber Q&A series. We got a lot of ground to cover. We're going to get right into it. And rest assured, there is going to be a part two, possibly a part three, and most likely a part four. But I will tell you, I will upload original content in between these video uploads because some of you have reached out and said, you either love the Q&A series that I do or you hate them. So there really is no in between. So I'm assuming if you are watching this right now, you are really into these Q&A series, and I want to make sure that you are rewarded for watching this particular content. Again, I consider this very important. These Q&As allow me to interact directly with a lot of my viewers, whether you routinely watch this channel or whether you just casually come onto this channel and watch whatever videos interest you. Regardless, if you did ask me a question, I want to make sure that you get a full answer. So here we go. Question number one, and I got to put the glasses on because we are going to talk a little bit of finance in this particular segment. What is a good profit percentage to get on a short-term speculative collectible? I understand that any positive profit from selling a collectible is good. I just want to get a baseline percentage to judge my future investments. I usually try to get a 50% profit margin after all fees. That includes eBay, PayPal, Bricklink, auction fees, whatever site you're selling on. 50% return is pretty much what I look for on short-term speculative collectibles. Again, I do not invest in short-term, mass-produced, pop culture-based collectibles for the long term. I am eventually looking to sell that particular item for a profit and moving that money either in the traditional financial assets or items on the antique side of the equation that have potential to be invested in over the long term, meaning 10, 20, 30 years. So a lot of times what I'm doing is I'm selling Amiibo, Lego, Nintendo games, Pokemon, Magic the Gathering, and I'm using that money to invest in mutual funds, real estate, or rare coins, currency, traditional antiques, firearms, historical documents, and the like. I like to invest long term on the antique side of the equation. In my opinion, there's too many people out there that are making the mistake. They are trying to gauge long-term speculation in pop culture collectibles that are being mass-produced in present day. That is a recipe for disaster, and a lot of you guys out there, you're going to eventually learn your lesson as to why that doesn't work. Trust it from somebody who has over 30 years of experience understanding and analyzing these markets. I will say this, and I don't mean to toot my horn, but I learned from some of the best in this particular business, meaning the antiques and collectibles trade. A lot of my mentors were multimillionaires. They had collections in the 6-7 figures. That's pretty much who I learned from. So I trust their analysis when they tell me, hey, Sean, if you get into this market, understand this is not going to work long term. You're not going to be able to gauge the market properly long term. You need to invest, if you're going to invest in this market, on a short-term basis. It's too speculative. And that's the wisdom that I put out there for all of you that watch this channel, whether you love it or whether you loathe it. Next question. Sean, congrats on the 4,000 subscribers. I should state that this question ties in directly with the previous question. When buying for short-term profit, when do you decide to sell? I just answered that question. I look for 50% profit margins. Occasionally, I will look at something and go, oh, I'm only going to hit a 40% profit margin on this particular item after fees. I will still sell it. A lot of people make the mistake where they buy into a lot of these items, whether it's Amiibos, whether it's Lego, and they go, well, gee, this item that I paid 15 bucks for is now worth 40. Maybe if I keep it for a long enough time frame, it'll go to 80 or 90. You need to understand the opportunity cost involved with that decision. There's a lot of people that come to me and say, hey, Sean, I sold my Amiibo collection when some of these items were going for $30 or $40. Now they're going for 60 to 80. And I come back to those people and I say, could you have predicted which ones were going to sell for $60 to $80? And they always say to me, no, I could have kept the whole collection though. And I say that would be stupid. If you decide to invest long-term in pop culture items that are mass-produced in present day, in most cases, it will work against you. It will not work with you. Trust me on that. Sean, do you buy multiple copies of an item or do you diversify within the category when engaged in short-term speculation? If I have a lot of confidence in the item, I will buy multiple copies. One of the reasons why I have such a large position in Nintendo Amiibo is because Toys R Us, before they went out of business, they used to do sales where if you bought one Amiibo, they would give you another for 50% off. Well, I had a connection there where I was buying literally cases of first edition Amiibos that I still have. I have pretty much an entire storage unit filled with factory fresh, case fresh first edition Amiibos from all the coveted figures that are now selling for $40, $50, $60. If you want to give me $60, $70 for a first print Amiibo Kirby or a Donkey Kong, I'll gladly take your money. Really, if you want to look at that as a long-term investment, you want to be a Timmy, by all means, you do you. I'm taking your money. I'm pretty much taking the profit. I'm putting it in the financial markets and or all is what you guys are doing who are buying that from me. You're financing my rare coin collection, which I thank you because honestly, I'm up close to completing a full type near mint uncirculated set of US coins, literally from the late 1700s all the way up through the 1940s, which has been one of my goals. So I'm happy to complete that particular collection on the profit of some of these speculative assets. And I'm not saying that to be mean. I'm just saying maybe one of you will get lucky. Maybe that first edition Donkey Kong or that first edition Kirby Amiibo that came out in 2014, maybe 20, 30 years, it may sell for a couple $100 or maybe a couple thousand. I don't know. I doubt it. I'm happy to take the profit today, though, is what I'm saying. I don't want to bet long-term on a mass-produced item like that. If you guys do, by all means, do you. Again, some of you out there, you tell me, Sean, I just like it. I just want to own it. That's okay. Just as long as you understand you are paying a premium to own that collectible. And you could be using that money for something else. Something to consider. Next question. Sean, looking forward to another year of great content. Yes, we all survived to the year 2021. I've said this before. 2021, hopefully, will be much better than 2020 when we look back through history. I have two questions. Will we continue to see prices increase in pop culture collectibles with the second wave of stimulus? Yes, most likely. Unfortunately, guys, I hate to say this, but as long as the government keeps giving out that money, there's a lot of unsophisticated people that are getting that money. And rather than putting it in real estate, paying off debt, or putting it in the stock market, S&P 500 index fund, total stock market index fund, they are haphazardly going after a lot of modern era pop culture items. Now, again, maybe you're financially established, maybe you have money, and you just want to own those items. I'm not attacking you in that regard. I want to make that very clear. I get it. Some people just want to buy some of these items, and they don't mind paying an inflated price for them. I get it, brothers and sisters. But what I am stating, if you are one of these people that thinks, oh, look, the government's giving me free money, I'm going to log on to eBay, Amazon, TCG Player, and start buying all of these items that are mass-produced in the modern era and paying a premium to get them, I'm sorry, you're not making the best use of your money. You are falling into the speculator trap. And I did a video on that, speculator's fallacy, where, oh, it's okay to pay a premium for this because over the long term, this market's going to exponentially go up in value. That is patently false. Markets in the antiques and collectibles trade do not work the way most speculators think they work. That has always been the case. It's just a lot of these people on these collecting forums, on YouTube even, on Facebook groups, they continue to spout irregularities and falsehoods about how these collecting markets work, both over the short term, over the long term, and the little Timmies, the little Poindexters out there, they believe these people over somebody like me who's coming on YouTube, sharing the knowledge, or even if you want to read Harry Rinker every 2 weeks, every month, he puts out a new article on the antiques and collectibles trade. There's a lot of great commentary on investing in these markets if you know where to look, guys. There's a lot of columnists, analysts, consultants in the trade, just like myself, who do routine commentary about the state of finance and investing and speculating in antiques and collectibles. And they all urge their readers to use caution in these markets over the long term and in certain instances over the short term. That's all I'm going to say. Next question. Is there a right time to open an S&P 500 index fund based on market performance or just jump in whenever you're able to? In my opinion, don't try to time the market. Just get in as quickly as you can and remain in for as long as you can. And over a 10, 20, 30-year period, you will make money. It's almost guaranteed. Nothing is guaranteed, to be fair. I don't like to use the G word. The Earth could get hit by an asteroid and be split in two. We could have a civil war. We could have a nuclear war. So nothing is guaranteed. But overall, over the long term, the stock market will return 7% per year. Now, in some years, it's going to go negative. In other years, it's going to go gangbusters. It's going to go 20, 40% returns. If you average it out over the long term, it's going to be 7% on average. That's the historical average. So I will tell you, if you are thinking to get involved in a total stock market index fund or an S&P 500 index fund or even an ETF, do it as soon as possible. Keep adding to that position over the long term regularly through dollar cost averaging. And within 10, 20, 30 years, you will have something. That's where I got most of my money, guys. It's basically through long-term investing, long-term holding of assets. I don't follow the news media. I don't get scared when a billionaire investor on CNBC says, oh my God, there's going to be a stock market crash. Because you know what I'm thinking? I hope there is a stock market crash because I will gladly come in. I will buy up all those assets at a reduced rate. And then when the market goes up again, I'm going to make even more money. That's the way I operate, my brothers and sisters. That's why every now and then I always have to laugh. I get a comment on my channel that says, Sean, I can't believe you put 80% of your net worth into the stock market. I hope it crashes. That'll teach you a lesson. Well, what these little Timmies and Poindexters don't realize is I hope it crashes too. I want to buy this stuff at a discount. I cleaned up during the 2008, 2009 financial crisis. I cleaned up during the Corona crash. I'm still going to Wall Street and getting stocks on sale. There are certain stocks that are undervalued, in my opinion, at present time. I'm going after those stocks, building a position for them, because at some point, whether you like it or not, guys, the pandemic will end. The political strife that we are going through in the United States is only temporarily. It's not going to last forever. People are going to eventually learn to live in a fractional government, just like we have been before. Before Trump came into office, we were pretty much divided between liberals and conservatives, Democrats and Republicans. Guess what? That's pretty much what's going to happen over the next few years. We're going to get back to being a politically divided country with a little less anger than what we have right now. So I don't consider investing in stocks, investing in financial assets risky if you are doing it over the long term. That's key. You are not going to get rich quick in the stock market. Don't buy penny stocks. Don't do any of these stupid things like options trading or Forex currency trading for you guys that have no experience in that. Just go after an S&P 500 index fund or a total stock market index fund or an ETF. Put your money there regularly over the long term, no matter what. Whether the market drops 50%, goes up 40%, forget the percentages. Just do it, and you will have something if you hold it there for 10, 20, 30 years. Next question. Sean, can you do more stock market videos and general financial advice? Yes, I am working on them. Just keep in mind, because I kind of run this YouTube channel on a part-time basis, a lot of my videos right now are backlogged. What I do is, and somebody asked this question that I'll probably get to in another segment, what my process is for coming up with a YouTube video from start to finish. So if we get to that in this segment, I will gladly answer that question. But overall, it takes me a while to finish these videos. Right now, I am still 60 to 70 videos behind. And I was caught up to the point where I was only 50 videos behind, but I got far behind again due to work in the consulting realm that pulled me away from filming these videos. So just be patient. And yes, they are coming. I am going to even be doing a video on Bitcoin. I'm actually going to be doing several videos on Bitcoin for those of you that keep asking. Yes, they are coming. Now, next you go on to say, I had decided to not touch penny stocks or collecting and investing in antiques until I have $100,000 diligently invested in the stock market. I already took a big loss in penny stocks. Yes, you will take a loss in penny stocks. Penny stocks can easily be manipulated. There's a lot of people out there that got rich manipulating penny stocks. That's why I warn you guys, In the antiques and collectibles trade, there is no SEC. Anybody can come in and manipulate these markets without consequence. Well, in the financial markets, which penny stocks are a part of, if you do try to pump and dump penny stocks, you can get into a lot of trouble. Avoid penny stocks. They are not a good long-term investment. They are not a short-term investment. And anybody who is educated in finance, anybody who is a sophisticated investor, is not, for the most part, investing in penny stocks. Adopt a buy and hold strategy forever. Go after mutual funds, ETFs. When you get $100,000 in mutual funds and ETFs that are based on a market index like the S&P 500 index, or even the total stock market index as a whole, you can then branch out and you can start risking some of your money in individual stocks, bonds, and the like. That's usually what I tell people, okay? Next question. Great channel. I've watched every minute of every video. Wow, you are dedicated to bring me into your life like that. I have literally at present time almost 200 plus videos on this channel. I am so sorry that you spent that much amount of time with me. My gosh, you're going to need a very good shrink after this. In all honesty, you go on to state, I'd like to know if you differentiate between various types of comic books. I feel modern comics are highly speculative, similar to Pokemon. You would be 100% correct in that analysis. You go on to state, but I feel pre-1965 comics are a solid, stable investment closer to coins and books. Be very careful with that analysis. We don't know this yet. We literally have another 20 years to determine if 1965 and earlier comic books are going to become a more mature market in the trade. It could go either way because they are pop culture collectibles. And also note that if that market does become mature, it could also change. A lot of markets, as they go through the speculative to the established to the mature market segments of the trade, they will change over time. That's what happened with Hummels. A lot of people thought Hummels were going to become a stable, mature market in the antiques and collectibles trade. And to be fair, the top 3% of the market, there's some Hummels right now on eBay that are going for $2,000 to $3,000. But overall, the bottom dropped out. Younger people are not collecting Hummels anymore. Hummels were a collectible category that should have died out literally in the 80s and 90s. But that's when a lot of older people gravitated towards them, and it pushed that whole market into another speculative phase. And as a result, prices were rising. Then in the 2000s, when younger people got involved into the market, they didn't want Hummels anymore. So the market started to die out. I suspect comic books are going to follow a pattern where there is going to be at some point a 10 to 20% pullback on most comic books. Now, to be fair, if you're going after an Action Comics 1, if you're going after a Batman 1, a Detective Comics 27, some of those books, just due to their overall rarity and scarcity, there may not be as much as a pullback because they don't come to market that often. But those of you that are collecting Amazing Fantasy 15, even a lot of the key books from the 1965 era and earlier that showcase first appearances of Marvel comic characters, I predict there is going to be a pullback on some of those books. Right now, with Marvel and DC populating both movie theaters, well, we can't go to movie theaters right now, but with the movies that keep coming out that feature Marvel and DC characters, right now, they're still in the cusp of the public eye and the public persona. But overall, people are tiring of those movies and shows. You can pretty much see it. That's why one of the things I said when the pandemic hit was, one of the comments that I made, and a lot of people got mad at me, I said, great, now we don't have to sit through another Marvel movie every 2 months. Because Marvel, or the company that owns Marvel, Disney, put a lot of the releases of a lot of their popular movies on hold because of the pandemic. And I was actually glad about that. You go back on to say the first Argosy comic price guide was published in 1965. The collector market has survived the 1990s burst bubble. There has been a collector market for 60 plus years, and it is highly established. I do agree. Comic books, most vintage comic books have crossed over to the established portion of the antiques and collectibles trade. There is still a speculative bubble in that market at present time, as I just stated, because a lot of those comic characters are very popular. They're being kept in the public eye. But overall, I don't consider as of yet that we can ever talk about pre-1965 comics joining the ranks of coins, currency, historical documents, and first edition books. Again, they are still a part of pop culture. Go back to the video I did on the history of pop culture where I talk about penny dreadfuls. Go look up the value of penny dreadfuls today. Nobody's collecting them. The comic characters that came out of those books have no bearing in today's marketplace. They're not in pop culture at present time. And as a result, values have plummeted. The same thing is going to happen with Buck Rogers, other pop culture icons that were very popular in the 1970s and 80s. They had a rebirth. Those particular markets are going to start to go downhill. If you don't believe me, look up A-Team, look up Knight Rider, all those properties that I grew up with. Younger generations don't even know what they are. I got into a big discussion with a young lady at work that works in my corporate job, and she's in her 20s, and we started talking about pop culture. And I brought up Silver Spoons. I think I said this before, which was one of my favorite 1980s sitcoms, and she didn't even know what I meant. I then changed the subject to the A-Team. She had no idea what the A-Team was. So a lot of these iconic characters, a lot of these iconic licenses and properties that I grew up with are going to die out over the next 10 to 20 years. It's bound to happen. It'll be interesting to see what happens with comic books, but again, I would suspect there's going to be a 10 to 20% pullback some point in the future with a lot of these books. The asset class cannot go up exponentially, continuously over the long term. It's already soaring at all-time highs, so we'll see what happens. Next question. Sean, stamps. For the short, mid, or long term, is it worth trying to understand this market for somebody who knows nothing? Or is it nearly impossible to make money without being a 30-year stamp collector who knows everything already? No, you can get your feet wet. There are books out there. I think I did introduce one called Money Stamps on this particular channel. If you want to learn the stamp collecting marketplace, by all means, take the time and learn it. Just do not go into this market without patience and without understanding and start spending money. Do not go into this market and start buying up stamps with your credit card thinking that these are Pokemon cards or Magic the Gathering cards. The collectibles marketplace has a low barrier to entry. The antiques marketplace, the market for stamps, traditional antiques, coins, currency, firearms, first edition books, historical documents, artwork, those particular collecting categories are established and mature. As such, they have a higher barrier to entry. So you got to do your research. You have to take the time to learn the market. You have to take the time to write out a written plan. What do you like about stamps? Why are you investing in stamps? Are you collecting them just because you have a passion, or are you trying to make money over the long term? Are you investing in them? Those are different strategies that you have to employ if you are getting involved in that market. So what I would encourage you to do is start getting books on stamps, start learning the market, start just observing auction prices paid for certain rare stamps. And then when you're ready, dive in, pick a stamp that you really want to buy, research the market for that stamp, and then get your feet wet. That's how you learn these markets. Take your time if you are learning markets on the antique side of the trade. Again, we're not dealing with amiibos here. We're not dealing with Pokemon cards. We're not dealing with video games. These markets require more of a time investment to learn them before you dive into them head first. So that's something to learn about. But yes, you can still get involved in that market if it fascinates you. You can make money in that market. It just starts with a lot of knowledge and a lot of research. Next question. Hey, Sean, how do I find antique and collectible categories that are in a bear market and or quote unquote undervalued? You guys know I do not like the term undervalued as it applies to antiques and collectibles. In my opinion, if an item in the antiques and collectibles trade is selling on an established market like heritage auctions or eBay or the like, it cannot by its nature be undervalued because the primary collectors that go to those sites already see what it's selling for, and if it was truly undervalued, they would scarf it up, and as a result, it would not be undervalued because more bidding activity would take place, which would cause the item to increase in value. So I hope that makes sense. Is there a way to research data to find this? Sure, I offer collectible and antique consulting. You can pay me for a phone call, and I will gladly walk you through the steps. No, I know you didn't like that answer. Just kidding. But what I will tell you is, yes, it takes a lot of research, and it takes understanding as to how these markets work. There are certain markets on the antique side of the equation that go through cycles. I'm not saying they're predictable cycles, but antiques are more cyclical than collectibles. Collectibles are more linear, as a lot of the people out there that are investing in graded video games, Pokemon cards, Magic the Gathering, if you guys make a mistake in your buying decisions, you're going to learn just how linear those markets are over the next 10, 20 years when nobody wants the stuff that you paid a premium for in the year 2021. Antique markets, on the other hand, are cyclical. As a result, there are certain pieces of antique furniture that are now in a bear market. There are certain segments of the coin market that continue to go through bear and bull cycles. There are certain other segments of the antique market, whether we look at rare glass bottles, art glass, art pottery, that continues to cycle as well. You just have to study the markets. You have to pick an item that you want to learn about it, study the price history of it, and then also look at what prices are today and where you think they're going to go. For instance, I'll use this as an example. Right now, mid-century modern furniture is very hot on the antique side of the equation when we talk about antique and vintage furniture. Mid-century modern furniture was not always hot. If you go back to the 1990s, Gothic Victorian furniture was all the rage back then. If you don't know what Gothic and Victorian furniture is, if you've ever seen a movie like Underworld that features vampires in it, the decor in like a vampire house or a Victorian mansion, that is what is considered Gothic and also Victorian. That was a very popular type of furniture back in the 1990s. Well, today, all the rage is mid-century modern, which was made popular. If you guys ever saw the show Mad Men, Mad Men really ushered in a new demand for mid-century modern furniture and actually started to push prices up. So what I would tell you is if you want to learn antique furniture, study prices that are being paid right now for mid-century modern furniture versus Gothic and Victorian furniture. And you're going to see that there are bargains if you want to take the risk and invest in Gothic and Victorian furniture. The problem is we don't know when that trend is going to come back in vogue. So it could take 10, 20, could take 30 years for Victorian furniture to come back in vogue. And maybe the trend becomes prominent 50 years from now. Well, if you're my age, I don't know about you, I'm not going to be looking to invest in Victorian furniture for 50 years out when I'm 44. That's not a wise investment strategy for me. So if you do the time to study these markets, you can learn how some of these trends go, either in the future or how they're looking to materialize over the long term. Hope that helps. Next question. Sean, what do you think about Figma, collecting and investing? Figma is obviously a action figure, toy property. They do make a line of deluxe figurines and the like. I do not like this market. I'm going to be 100% honest. I do have a video planned where I talk about the problem with investing in modern toys for either the short term or the long term. That video will premiere sometime in the future. People are just not heavily invested in action figures anymore from the modern era like they were when I grew up in the 70s, 80s, 90s, and the like. I do not like this market also because it's too speculative. A lot of the people that are buying these figures, they're keeping them factory sealed. They're not even opening them, and they're hoping that sometime in the future, a collector comes into that market and wants to pay a premium for it. Then they want to sell it at a profit. This market, just be very careful if you are involved in any of these markets for a lot of these speculative items like Hot Toys, Figma, other items of that nature. I see a lot of problems in that market at present time. Now, if you're somebody that studied the market really well, you know how to make money over the short term in that market, you do you. Make that money. Get that cash. But just be cautious of this market over the long term. Next question. Hey, Sean, great videos. What do you think about an ARK ETF? ARK is ARKK. In my opinion, VOO, which is the Vanguard equivalent of the S&P 500 Index ETF, is pretty pricey and already ran up. The problem with your theory there is you are looking at the market from a historical perspective and you are analyzing it and you're saying, okay, right now in the year 2021, the whole stock market is overvalued, especially the S&P 500 Index Fund. And you know what? I would agree with you 100%, but it doesn't matter because more people are investing in the market more than ever, which is causing prices to rise exponentially. Now, if you watch this channel for any amount of time, you know no asset class can go up exponentially over the long term. Well, the S&P 500 index fund is one of the markets that I choose to invest in, and I don't look at it as being pricey. I look at it as being a representation of the potential growth of the economy over the long term, and that's how I would encourage you to look at it. Now, getting back to your question, my problem with the ARKK, I'm just spelling it out for those that are unaware, ETF, is that it is not set up as a core holding for a portfolio. This is an innovation or really a technological ETF, meaning you are invested in one main sector. Now, my other problem with the ARK ETF is that it has an expense ratio of 0.75%. That is a quarter of a percentage point away from a whole percentage point. Go look up the expense ratio of VOO. It is literally a fraction of that. You cannot go wrong with a Vanguard or a Charles Schwab or a Fidelity or a T. Rowe Price based mutual fund or ETF that is geared towards the S&P 500 index. The expense ratios are extremely, extremely low, in my opinion. So I would not, if this is your core holding, I would not gear your investments toward an ARKK or an ARK ETF at present time. That's my opinion. Hope that helps. Next question. Happy New Year, Sean. Since you ended your video talking to us about this channel hitting 4,000 subscribers with a joke about 2020 hindsight, what's the biggest mistake you ever made in speculating on collectibles and or antiques? I'm going to answer this from a new perspective. If you guys are aware, if you go back and you watch any of my previous Q&As, I do talk about certain markets that I got involved in that really didn't pan out. One of them was the market for vintage machine-made marbles, believe it or not. Another market, I did talk loosely about Pez, and I mentioned some others. But what I will tell you is one of my biggest mistakes, believe it or not, in the antiques and collectibles trade was back in the 1990s when I was learning these markets, when eBay came, and eBay was pretty much the prominent way of buying and selling. I focused most of my attention on pop culture-based items. I didn't take the time to use my education in antiques to go out into the market and try to find some antiques that were selling at a discount. And as a result, back then, I remember two of my mentors really chastised me for doing that because they said I was too focused on short-term gains with pop culture collectibles. And looking back, that was one of my major mistakes because even though I made a ton of money on pop culture collectibles back in the 90s, back on the early 2000s, the one thing that I should have been focused on was expanding my knowledge in antiques at that time. I didn't come back and get back into antiques until 2004. And by that time, I was literally starting at a disadvantage point, meaning I really had to catch up on my knowledge because there were already a lot of sharks out there that were chomping in the bit to make money in that market. So that was my primary mistake. That's why I tell you guys, you cannot remain over the long term invested in Pokemon, Magic the Gathering, toys, comic books, video games, thinking that, oh, Sean, you don't understand. These markets are going to go up exponentially over the long term. I can assure you they don't work that way. You either got to expand your knowledge or you really have to get into these markets and get into them from the standpoint where, okay, I'm going to start taking some of my profits and I'm going to start putting that money into mutual funds, index funds, ETFs, and the like, so that I have something growing over here where I'm not even doing anything, but this money invested in the stock market is compounding over time. That's really to the point where you want to get to. Next question. Sean, since we're in the post-holiday season, do you have any thoughts on collectible Christmas ornaments or other vintage holiday memorabilia? Certain holiday ornaments will always be coveted. There's certain glass ornaments in the Christmas genre. There's certain paper mache Halloween collectibles that always do well at auction. But overall, they are not worth, quote unquote, investing in over the long term. There is a market cap or a limit to what people will pay for most of those items with few exceptions. That's why I'm not giving any direct names in this video. We're not going to talk about Christmas or Halloween or Easter or Valentine's Day decorations because yes, there is a collecting following for those items, especially if they're antique or vintage. But overall, the market returns are just not there year after year to justify investing in them. So I would caution you, if you are getting involved in that market, if you want to get into it just to have fun, or it's something that maybe you inherited a collection from your grandmother, or maybe you and your girlfriend like to go to antique marts and you like to decorate your house in vintage Halloween decorations or vintage Christmas decorations, okay. But don't try to invest in it over the long term. Most likely, it's not going to work out in your favor, because as generations age, they're not really attracted to a lot of that stuff. It's too esoteric overall. So I hope that helps. One last question, and we did get to it here. It's going to be on coins. Congrats on 4,000 subs. In a previous video, you've mentioned the grading coin speculative bubble with some coins that have never broken their all-time highs from the 1970s and 80s. Can you provide some examples of some coins that are selling for less than what they did 40 to 50 years ago? Yes, when you factor in inflation, if you look at some of the prices paid after the advent of third-party grading that came into the coin marketplace in around 1984, so the mid-1980s, if you look at the prices being paid for certain Morgan silver dollars, peace dollars, even certain gold coins, the prices that they achieved back then will never, ever be achieved again because people overpaid for those particular coins. There was a time, guys, when people were buying literally modern, what do I want to say? No, not modern, but I want to say common as day Morgan silver dollars, meaning none of the scarce dates, none of the Carson cities. We're talking like a 1921 Morgan silver dollar in MS65, graded by PCGS. Well, back in the 80s, believe it or not, people were literally paying close to $1,000 for that type of coin. It's insane what some of these dealers, what some of these market manipulators were getting for coins back then. Today, if you would put a 1921 Morgan silver dollar in MS65 graded by PCGS, even if it's CAC stickered, and you would consign it to Heritage, you're lucky if you get a couple $100 for that coin. It's common. Nobody wants it. Well, back during the speculative bubble of the 80s, people were bidding up these items to new historic highs. That's why I warn you guys about going after all these Pokemon cards, all these vintage video games, especially Nintendo games. You don't know 20, 30, 40 years from now, is a person born in the year 2020 or 2021 going to want a video game that's graded and encapsulated for a system that came out in 1985, literally 30, 40 years before they were born? The answer in most cases is going to be no. Be very careful. These markets are too speculative. I'm going to stop there for part one. I hope you enjoyed it. Part two will air shortly. And thank you for watching, and have a great night.